The Department for Work and Pensions has officially confirmed a major new initiative aimed at reducing fraud within the UK benefits system. Starting in 2026, individuals who receive certain benefits will be subject to a new eligibility verification process that involves checks on their bank accounts. This move is part of a larger strategy to make the system more secure and to ensure that taxpayers' money is reaching only those who are truly eligible. At the heart of this plan is what's called the eligibility verification measure. This is a key component of a new law, the Public Authorities, Fraud, Error and Recovery Bill, which gives the DWP greater powers to tackle benefit fraud. These new powers will allow the department to work more closely with banks and financial institutions to detect discrepancies in financial data that may suggest someone is receiving benefits they are not entitled to. The change comes amid growing concerns about the scale of fraud and error in the benefits system. Government figures show that overpayments due to fraud and mistakes currently cost the UK taxpayer around £10 billion each year. Since the onset of the pandemic, an estimated £35 billion has been wrongly paid out to individuals who were not eligible. And beyond the benefits system, an additional £3 billion is lost annually across other public services due to similar issues. These figures highlight the pressing need for a more rigorous system of checks and balances. The new system is not about monitoring spending habits or controlling personal finances. The DWP has made it clear that it will not have direct access to anyone's bank accounts. Instead, the focus will be on identifying specific eligibility indicators. For example, many benefits have a savings threshold, such as the £16,000 capital limit for universal credit, income-based job seekers allowance, income-related employment and support allowance, income support, and housing benefit for those under state pension age. Claimants who exceed this limit are not entitled to continue receiving these benefits. Under the new system, if someone is flagged as having bank balances or financial holdings that go beyond these limits, the bank will share limited information with the DWP. This includes details like the sort code, account number, the name and date of birth of the account holder, and the specific indicator that triggered the alert. This does not mean the government is monitoring spending, transaction history, or account content, just that it is using targeted signals to verify eligibility. Initially, the focus will be on three main benefits: universal credit, pension credit, and employment and support allowance. These benefits have been selected because they currently show the highest levels of overpayments, either due to fraud or error. By beginning with these, the DWP hopes to make the biggest impact in terms of financial recovery and system integrity. The process will begin with banks receiving automatic alerts to look for signs of ineligibility in the accounts of people receiving these benefits. When these indicators are found, the banks will securely share the relevant information with the DWP, which will then assess whether the individual is still entitled to the benefit in question. If the information suggests that someone may no longer be eligible for one benefit, the DWP can also use that same data to review their entitlement to other linked benefits. For instance, if a person is found ineligible for pension credit, the system might also reassess their eligibility for housing benefit, since the two are often connected. However, no decisions will be made automatically. Every case will be reviewed by a human being to ensure fairness and accuracy. Importantly, the new powers written into the legislation will not extend to the state pension. This benefit is explicitly excluded from these checks and cannot be added to the system even with future regulatory changes. This means pensioners relying solely on their state pension will not be subject to these bank account checks. The DWP is also reassuring the public that the use of this data will be strictly limited and regulated. The system has been designed to respect the privacy and financial autonomy of individuals while still allowing the department to prevent fraudulent claims. There is no intention to review personal spending or assess lifestyle choices, only to confirm that the financial thresholds set by the law are being respected. These changes are being introduced as part of a broader 5-year strategy that aims to save the government around £8.6 billion by cracking down on fraud and improving the efficiency of the welfare system. This includes not only enhanced data sharing with financial institutions but also modernizing IT systems, using artificial intelligence for fraud detection, and investing in specialist investigation teams. It's worth noting that these eligibility checks won't affect every benefit recipient immediately. The plan is to roll out the system gradually, starting with the 3 core benefits mentioned earlier. Over time, additional benefits may be added to the scope of the checks, but only with the approval of Parliament. This ensures there is proper oversight and public accountability in place before any expansion takes place. For benefit claimants who are worried about the changes, the key message from the DWP is simple: as long as you are reporting your income and savings accurately and staying within the legal thresholds, you have nothing to worry about. The system is being introduced to identify those who are abusing the system, not to penalize people who are following the rules. Many experts have welcomed the announcement, seeing it as a positive step towards restoring public trust in the benefits system. With billions being lost to fraud and error each year, the pressure has been mounting for government departments to find more effective ways of protecting public funds. These new measures, combined with stronger oversight and better data integration, could go a long way in achieving that goal. While some have raised concerns about privacy and the role of financial institutions in verifying eligibility, the government has emphasized that all measures will be compliant with existing data protection laws. Banks will not be asked to provide full transaction histories or personal spending patterns. The focus is purely on objective financial indicators related to benefit thresholds. Additionally, the introduction of this system is not intended to create barriers for those who genuinely need support. In fact, it could help the DWP redirect resources more effectively and speed up claims for those who are entitled. By identifying and removing fraudulent claims from the system, more support can be directed to people who need it most. The rollout of this system will likely be accompanied by public information campaigns to ensure everyone understands what is changing and how it affects them. Claimants will be informed if any concerns arise from their data, and they will have the opportunity to clarify or correct any information that may impact their eligibility. This also marks a shift towards using more real-time data in benefit verification, allowing the DWP to act more quickly and avoid long delays when circumstances change. For example, if someone inherits money or their savings increase beyond the allowed threshold, the department will be better positioned to respond promptly, rather than discovering the issue months or years later. In summary, the eligibility verification measure is a significant development in the UK's welfare system. It reflects a move towards smarter, data-driven fraud prevention while maintaining a strong commitment to fairness, privacy, and transparency. The key takeaway is that these changes are designed to protect the integrity of the system, safeguard public funds, and ensure that benefits are available for those who genuinely need them. As we approach the 2026 launch date, benefit claimants are encouraged to stay informed, ensure their financial information is up to date, and report any changes in savings or income promptly. For most people, this will simply be another step towards a more secure and efficient benefits system, one that works better for everyone.